Ready for a wild ride. Today, we're diving into Reminiscences of a Stock Operator.
Oh, yeah. One of the all-time
It
classics.
really is. And you know what gets me? It's almost a century old,
I know, right?
but it still feels shockingly relevant today.
Totally. It's like a crash course in market psychology, you know?
Exactly. And the best part, it doesn't read like some boring textbook.
Yeah.
It's like a financial thriller.
It really is. You got this larger-than-life character, the boy plunger.
Okay, the boy plunger, gotta love that name.
This guy starts as a teenager, right?
Mm-hmm.
And he's already wiping the floor with these seasoned traders
No way.
in these, what were they called? Bucket shops.
Bucket shops. Okay, for those of us who weren't, around back then,
Sure.
what exactly are those?
So picture like an early version of off-track betting.
Okay,
But instead of horses, you're betting on stocks.
I gotcha.
It was all about speculating on price movements.
Yeah,
Bit less formal than the real stock exchanges.
got it. So this boy plunger, he's like a prodigy in these bucket shops, right?
Totally. But the craziest part is he's doing all this before he even really gets what stocks are.
I know, it's mind-blowing.
Like, he's just completely obsessed with numbers.
Numbers obsessed.
And he could spot these patterns in the ticker tape like nobody else.
They called it reading the tape.
Reading the tape. Okay, I feel like I need to learn how to do that.
Well, imagine you're staring at this stream of stock prices, right?
Yeah.
Changing every second.
Yeah.
Reading the tape means you can look at those tiny little price moves, the volume, and kind of predict where the stock's going next.
Whoa, that's incredible.
Almost like deciphering a secret code.
So it's not just about picking, companies you think will do well in the long run.
No.
It's about understanding the psychology of the market in that moment.
Exactly. The boy plunger, he could practically feel the market's heartbeat,
That's wild.
And that's how he was cleaning up in those bucket shops.
Makes sense.
Yeah.
But here's what throws me.
You'd think those skills, reading the tape, all that, would translate to the real stock exchange, right?
You'd think, right.
But it didn't quite work out that way at first.
There was a bit of a learning curve. See, bucket shops were all about speed,
Right, like super fast.
like a constant game of hot potato.
Yeah.
But the real stock exchange, back then at least, there was this lag.
Lag.
Yeah, between like when you placed an order and when it actually went through on the trading floor.
Oh, wow. So it's like going from playing, I don't know, a video game on super fast internet,
Right.
and then suddenly you have lag on every button press.
Exactly. And that lag, that was the boy plunger's downfall.
Yeah.
At least for a little bit.
Wow. I guess even prodigies have to adapt.
It just shows the difference between gambling and speculation.
That's a good point. It's easy to get caught up in the excitement of a potential win
Totally.
without really understanding, like, what's actually driving the market.
Gambling, it's all chance. But speculation, as the boy plunger was starting to realize, it's about value, timing, managing risk.
So you're not just chasing the next quick buck.
Exactly. You need to see the bigger picture.
That makes sense. So this transition, bucket shops to the big leagues, what was the first major lesson he learned? The hard way, of course.
Oh, he learned it with what we'll call the Union Pacific incident.
Okay, the Union Pacific incident sounds ominous. I'm intrigued.
This is where it gets good, right? Because the boy plunger, even with his almost supernatural ability to read the tape,
Yeah.
he still gets tripped up.
Bye.
Self-doubt. The thing we all struggle with.
Oh, tell me about it. Self-doubt is the worst.
So picture this. The boy plunger gets this feeling he should short sell Union Pacific.
Okay, now hold on. For those of us in the back who might not be familiar with all the Wall Street jargon,
Sure.
short selling, break that down for us.
So basically, short selling means you're borrowing shares of a stock, selling them at the current price,
Okay.
and then hoping to buy them back later at a lower price, so you make a profit.
So you're betting the stock's going to go down.
Exactly. It's a way to profit off a downturn.
Okay, risky move, but I see how it could pay off big.
It can, but that's why you got to have a really strong conviction, right?
You really got to believe in your gut on this one.
Exactly. And here's the thing with the Union Pacific situation.
Yeah.
The boy plunger's hunch. It wasn't based on some big analysis, no fancy charts, just this gut feeling.
I've been there. Sometimes you just get a vibe.
Right. But now, this is where it gets really interesting.
Oh, boy.
He mentions this feeling to a friend, another trader, and this friend is absolutely convinced that Union Pacific is going to skyrocket.
Oh, no, he's trying to talk him out of it.
Oh, he's going on and on about how bullish he is on the stock, practically begging the boy plunger not to short it.
And the boy plunger's like doubting his own gut now.
And this is what gets me, right? Because most trading books, they tell you to trust your instincts.
Exactly.
But this shows you how powerful outside influence can be. especially when it challenges your own judgment.
So what happened? Did he listen to his friend?
He did. He let himself be talked out of the trade.
No way.
And guess what? Union Pacific tanks.
Oh, no.
The boy plunger missed out on a massive profit. I'm talking $40,000.
Yeah.
Back then, that was serious money.
Ouch, that's gotta sting. That's like a masterclass in what not to do.
Right. Talk about an expensive lesson.
Hmm.
He learned the hard way. Sometimes the hardest person to trust is yourself.
Profound. And also terrifying for anyone in the market.
It really drives home the point that trading, it's not just about numbers and charts. It's about mastering your own head.
Your own psychology.
Exactly. Now, the book, it explores this whole idea further through these two other characters, Old Partridge, or Turkey, as they call him, the Deacon. These two, they couldn't be more different.
All right, Turkey and the Deacon. I'm already hooked on these nicknames alone.
To Turkey, he's like the embodiment of patience in the market.
We could all use a little bit of that turkey wisdom.
Right. This guy, he's observing everything, taking his sweet time, only makes a move when he's absolutely certain.
He's not on Twitter frantically refreshing his portfolio every 5 seconds.
Yo way. He's the opposite of FOMO, the fear of missing out.
Love that. So who's our Deacon then?
Oh, the Deacon. He's our cautionary tale.
Yeah.
This guy is always chasing the next hot tip, even if it's coming from, like, someone's uncle's hairdresser.
Oh, no, the dreaded hot stock tip from your barber?
Exactly. He's all over the place, easily influenced, jumps on every opportunity.
Sounds a little too familiar, honestly. We've all been there.
Right. But the book shows how that can be a recipe for disaster in the market.
So he's like the opposite of our patient turkey.
Total opposite.
Ide.
And the book, it really highlights this difference with this anecdote about sugar speculation.
Ooh, sugar speculation. Lay it on me.
Okay, so the Deacon, he hears this rumor, right?
Uh-oh.
It's supposed to be this sure thing, insider information about the sugar market.
Ooh, insider information, dangerous territory.
Right. And he's like losing his mind with excitement, ready to bet it all.
I can practically see the dollar signs in his eyes.
Right. But here's where Turkey's wisdom shines through.
Okay, what does Turkey do?
Instead of just like blindly following this tip, he decides to test the waters a bit.
Test the waters. I like
Yeah. So he actually sells a large quantity of sugar short, figuring if the tip is true, if people are buying like crazy, the price shouldn't drop.
I'm calling their bluff.
Exactly. Genius, right?
So what happened?
The price barely moves,
Wow.
which tells Turkey everything he needs to know. Tip was bogus. He just saved himself a fortune by not giving in to the hype.
That's incredible. What a legend. It reminds me of that saying, if it sounds too good to be true.
It probably is.
Exactly. But, it's easier said than done when you're caught up in the moment.
Oh, for sure. Now, as our boy plunger, he's, maturing as a trader, he starts to embody some of that same wisdom that we see in Turkey.
Okay, so he's learning from the best.
Right. He realizes, reading the tape, all those short-term moves, it's just one piece of the puzzle.
There's got to be more to it.
He starts to see the market as this reflection of, well, everything else that's going on. Economic conditions, politics, even social trends.
It's like he's connecting the dots on a much larger scale.
Exactly. He's not just trying to predict the next blip on the radar. He wants to understand the whole weather system.
I like that analogy. So how does this new perspective play out in his trading?
Well, we really see it during the panic of 1907.
A panic of 1907. I mean, talk about a financial earthquake.
It was a wild time. Banks collapsing, everyone panicking.
Total chaos.
But the boy plunger, because he's learned from his past mistakes, he sees it coming.
No way.
He starts picking up on the warning signs, like banks getting overextended, credit markets tightening.
So it's not just looking at stock prices anymore. He's looking at the whole financial system.
Exactly. And what does he do? He starts selling short, getting ready for the downturn.
So while everyone else is panicking, he's profiting.
You got it. It's
Yeah.
like he's learned to surf those waves of fear and uncertainty.
That's incredible. But here's what gets me. Even after the panic, when everything's recovering, there are opportunities everywhere.
Oh, yeah. Tons.
But he doesn't jump back in right away. He shows some serious restraint.
That's the thing about the boy plunger. He's always learning, always evolving. He even says, and I love this quote, he says, "I wasn't going to lose my position entirely. The market wouldn't be right for me to trade in for a while. The first $10,000 I made in the bucket shops, I lost because I traded in and out of season, every day, whether or not conditions were right. I wasn't making that mistake twice."
Wow. Talk about learning from your mistakes.
Right. It's not about chasing every opportunity. It's about patience, discipline, waiting for the right moment.
Kind of like a surfer waiting for that perfect wave.
Exactly. Sometimes the best trades you make are the ones you don't make.
Hey,
But look, we got to talk about one more thing.
what's that?
This whole idea of manipulation and misinformation in the market.
Okay, yeah, that's the stuff that keeps me up at night. Makes you question everything.
Right. Well, the book, it doesn't shy away from that at all. It actually pulls back the curtain on some pretty shady stuff that was going on.
And I'm guessing some of that stuff is still happening today.
Oh, you better believe it. Take the boy plunger's experience with coffee speculation.
Okay, what happened with coffee?
So he does his research, thinks he's found a solid opportunity, puts a lot of money into coffee,
This is making me nervous.
and then bam, government steps in with this price-fixing committee.
Talk about bad timing.
Right. Total curveball. And it just shows that no matter how much you think, how much research you do, the market can still surprise you.
It's like trying to predict an earthquake.
That's a good way to put it.
Yeah.
So what do you do? Right.
Yeah, how do you protect yourself when stuff like that can happen?
The boy plunger's experience, it highlights this crucial idea of adaptability. You got to have a plan, sure, but you also got to be ready to adjust when things change.
So don't be afraid to pivot. Don't get married to your ideas if the market's telling you something different.
Exactly. Now, before we wrap up, I want to leave you with this one big idea from the book.
Okay, hit me with it.
Nobody beats the market.
Nobody beats the market. Wait, are you serious? You're saying that even with all the knowledge, the experience, all the fancy algorithms these days, nobody can consistently outsmart the market?
That's exactly what this book argues. Humbling, right?
Definitely humbling. So what's the takeaway then? If we can't beat it, what are we supposed to do?
It's about understanding the market, respecting its power, and, adapting to its rhythm, not
Oh,
trying to overpower it.
so it's more like a dance than a fight?
Exactly.
Mm.
It's about finding that harmony, that balance. And honestly, that's a good note to end on.
It really is. You've given us a lot to think about today, and I think that idea, nobody beats the market, that's something we should all keep in mind. It's a good reminder to approach investing with a healthy dose of humility. Thanks for joining us for this deep dive into Reminiscences of a Stock Operator. And until next time, happy investing, everyone.